What's up, income investors? Adrian here, and welcome to another video in my monthly series where I present to you my dividend stock picks of the month designed for value and income investors looking to build a nice stream of passive income. So some stock market volatility is back this month. Most experts agree that this small correction was needed after the nice rally we had. So now the second wave of COVID-19 is upon us. There's the gridlock in Washington, D.C. over the next stimulus bill. There's, of course, the upcoming U.S. election, rock bottom interest rates, low oil demand, the race for the vaccine is on, and blah, 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 blah. Honestly, who cares? We're passive income investors that simply buy and hold stocks, collected dividends along the way, and enjoy the show. So the reality is, if it's not COVID-19, there's going to be something else anyways in our crazy world. So instead of being anxious, fearful, and worrying, let's stay focused and build up our passive income stream. So in my September picks last month, I focused on energy, financials, and real estate sectors that were very undervalued and continue to be undervalued right now. So those picks are still great right now. So if you haven't seen that video, make sure to check it out. I will be focusing on these three sectors again this month because that's where the opportunity is. So just a quick disclaimer before I unveil my picks for the month of October. I'm not a certified financial advisor or have any financial education whatsoever. However, I've been investing on my own since 2012. So currently I'm generating a little over $1,000 a week in passive income. So my investment strategy focuses exclusively on stocks and funds that provide a dividend. So all my stock picks will pay a dividend, and they're all stocks that I own myself. So I definitely consider myself an income investor, which means the most important thing for me is generating a relatively safe and consistent stream of passive income every month. I'm also a value investor at heart, which means I look for undervalued stocks and sectors which have a high dividend yield. It's one of the easiest ways to maximize your income stream, simply because when stocks or certain sectors are undervalued or lower due to whatever is happening in our crazy world, the dividend yield, think of that as the interest rate, is much higher. So my monthly stock picks will definitely reflect my personal strategy. So without further ado, let's check out my top picks for the month of October. All right, pick number one is the covered call US Banks ETF. The stock symbol is ZWK. This is managed by BMO. They give their dividend monthly. So this ETF basically holds the 16 biggest banks in America and US. It also uses a covered call strategy, which boosts your dividend yield. So if you look at the stock prices now, the 1 year high was $33.18, which gave you a dividend yield of 6.6%. But right now it's trading at about $20.15. So as you could see, quite a big discount because you're getting a really good dividend yield of 10.72% if you invest in this right now. So my key points and reasoning for this pick is that the financial sector is amongst the hardest hit during the COVID-19 pandemic, which simply means it's a great buying opportunity for us. This ETF only contains the biggest US banks. That includes legends like JP Morgan and Chase, Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, etc. So only the big boys here. It has a consistent and growing monthly dividend distributions, so there's very little to no fluctuations. This is true for all BMO ETFs, by the way. You have an experienced covered call fund manager, BMO. The covered call strategy, of course, provides two sources of income instead of one. So you have dividends and your covered call option premiums, and of course the really high dividend yield of over 10%. So I'll show you quickly the dividend history since I mentioned it. If you just open the homepage for this ETF and go to tax and distributions, this is where you'll see the actual distribution. So this ETF came out in 2019, and as you could see, it started at 13 cents per share, then 14.5, 15.5, and as you can see, it's going up and up and up. 16 cents at the end of 2019, and in 2020 it's remained relatively stable at 18 cents. So it's really good that they're growing the distribution, and as you can see, even during the COVID-19, the worst months, it's staying very solid at 18 cents a share. So So a really solid ETF to pick up right now. Well, pick number 2 is the Energy Giants Covered Call ETF from CI First Asset. The stock symbol is NXF. So this is where you're gonna get that nice undervalued energy exposure. They give their dividend quarterly, so every 3 months instead of monthly, however. So this ETF holds 15 of the biggest energy producers in the world. Companies like ExxonMobil, Chevron, Shell, all the big players, including BP also in the UK, Total in France. So really nice exposure. And the key thing here, it has no Canadian exposure. So this is done on purpose. So it's geared towards us Canadian investors that already has significant exposure to Canadian oil and gas companies like Enbridge, Suncor, etc. So there's none of that in here. So you're getting more global exposure, which is great. So if we look at the 1-year high stock price, it was $6.90. So it was giving a dividend yield of 6.96%. But as you could see now, quite a big discount. It's trading at about $3.21, which is translating right now to a dividend yield. And yes, this is not a joke, of a little over 15%, which is absolutely great. So my key points and reasoning for this one, again, the energy sector is struggling right now because of low oil demand and low oil prices. So very undervalued equals a great buying opportunity for us. You have global exposure. So you have US, Europe, Brazil, Colombia, China. And don't forget, there's no Canadian exposure here. You have very high and consistent dividends despite the low oil prices, and that's thanks to those covered calls. Very powerful during low market. So the recent quarterly dividend was 11.3 cents. So if you want to check it out, you could just click here and I'll show you the history real quick of the distributions or the dividends. So here it is. As you could see, I was not lying. The average dividend yield for the last years over 15% right now. So if we drop down the distributions for 2020, you could see here the March one was a little under 10 cents, June 15.6 cents, and the one that recently just came out last week was 11.3 cents. So very consistent dividends despite low oil prices, and that's because of the covered call strategy. Very powerful strategy. Because you're getting, of course, once again, 2 sources of income instead of 1, the dividends and the option premiums. And don't forget, when stocks are very volatile, like energy stocks are right now, the premiums on options that the fund managers sell or go up, or they're much more valuable. So that's why you're getting that nice 15% yield. So really good way to get exposure to the energy sector, which is very undervalued right now. So my third and final pick shouldn't be a surprise. It focuses on real estate. It's the Slate Office REIT. The stock symbol is SOT.UN. So these guys give their dividend monthly, like most REITs out there. So this REIT owns, they own 36 office properties, 34 across Canada and 2 in Chicago, with a total value of $1.7 billion. It's managed by Slate Asset Management. They also, of course, manage the Slate Grocery REIT, SGR.UN. So the Slate Grocery REIT was actually a pick in last month's video. So if we look at the 1-year high price of $6.40, it was giving a dividend yield of 6.25%. But right now, really big discount at $3.61. So you're getting a little over 11% dividend yield. Simply amazing. So my key points and reasoning for this pick, obviously commercial real estate, especially retail and office real estate, is extremely undervalued right now because of COVID-19, the safety restrictions and the closures. So the key thing to remember here, and I know what you're thinking, how the heck do they sustain an 11% dividend yield? Is it even sustainable? Well, the answer is yes, and I'm going to tell you why now. So they have a very low and conservative payout ratio of 61.9%, which means the dividend is easily sustainable. So what is a payout ratio? Well, REITs give out their dividend. It's basically rental income that they generate from their property. So the payout ratio is the percentage of the rental income that gets paid out to the shareholders, which is us, in dividends. So if it's 100%, it means they're giving all their rental income out in dividend, which means it is sustainable. but just barely. So usually REITs have payout ratios of about, depends on the REIT, but 61.9% is a very, very low and conservative payout ratio. It means it's easily sustainable. For this one here. Also, another good point for this one is that they have high quality tenants, including a lot of provincial and also the federal Canadian governments and other high credit tenants like CIBC, which is big one of the big 6 Canadian banks. That's actually their biggest tenant, and also Bell Canada, which we all know very well. Their rent collections have also been really, really good during the pandemic. 96 and 97% of rent collected, so they're performing much stronger than the retail on the retail side. Of course, you're getting a high dividend yield of over 11%. That's always a good point. And this pick was actually featured in my latest video where I go over 3 very undervalued REITs during COVID-19. So I strongly suggest to check out that video if you haven't checked it out. I go into detail a lot about this company as well as 2 other REITs which I feel are very undervalued and should be picked up right now. So those are my picks for the month of October, guys. I hope you enjoyed them and decide to invest as well, so you could enjoy making easy passive income. Please hit that like button. Let me know if you agree or disagree with any of my picks or have any picks of your own that you want to share. I'll be more than happy to provide my opinion on them. Also, give us a follow on Instagram for more content on stocks, stock picks, and passive income strategies. And finally, please make sure you're subscribed not to miss out on next month's stock picks as well as my other content. My mission is to help average working Canadians to build their own stream of passive income in order to enhance their quality of life. Don't forget, if you don't make money while you sleep, you will have to work until you die. So with that, take care, guys. Thanks for watching and see you next time.